Hey guys, how's it going? So in this video, I want to talk about scaling your portfolio and making money trading options. So many people think that trading options is really risky, but the fact of the matter is I actually have two seven-figure portfolios. I mean two, and I'm under 30 years old. So here's one portfolio and here's another portfolio. All right, so these two portfolios are both seven figures, which allows me to travel the world. That's why I'm living in hotels. That's why I'm in a different country every single month. Now, what I want to specifically talk about in this video is how you can scale up your portfolio even if you have a small, medium, or large portfolio. It really doesn't matter because scaling your portfolio is very, straightforward. Whether you have a small portfolio or a big portfolio, it's actually a very similar strategy. The only real difference is with a smaller portfolio, you can take on a little bit more risk. And that's because if you lose a small portfolio, which by the way, I'm not advocating for losing money. I totally get it. Most of you guys have worked super hard to make your money, right? Obviously, money is meant to be protected and you don't want to lose it. But at the same time, if you're only working with $3,000 to $5,000, then you can absolutely afford to have a little bit higher of a risk tolerance. Whereas if you have, a couple $100,000, then you absolutely need to protect that capital and you can't afford to lose it. So if you actually think about it, you can have a little bit of a higher risk with a smaller portfolio and a, lower risk with a bigger portfolio. And a lot of people ask me, why can't you scale a big portfolio as fast as you can scale a small portfolio? Well, the reason is because if you were to double a small portfolio, $3,000 to $6,000, that's a few $1,000s. But if you're going to double $100 million every single year, you're soon going to become one of the richest people on the entire planet Earth, and you're going to be richer than Elon Musk if you can double your money every single year consistently. So it's just not possible. At a certain point, it's harder to trade. You can't do some of the small account strategies. And just in general, as you have more money, it does become harder to scale. However, the good news is none of you guys are going to have that issue because it becomes hard to scale past $5-10 million. And most of you guys will be more than happy with $5 or $10 million. In fact, 99% of you guys would be retired at $5 million because almost nobody even would make the same amount of money. Because on $5 million, if you make 20%, that's $1 million. Most people don't make $1 million. Maybe a couple people, only business owners, doctors, and potentially some lawyers that own their own practice, right? So essentially how you would grow a portfolio is really simple, okay? It's not rocket science. Some people think that I've grown my portfolio from $2,000 to $2 million. I've written that, and that is sort of the truth. But the actual truth is I have grown $2,000 to $2 million by adding some money along the way consistently. So most of my gains in my two portfolios are actually gains, but I'm going to be honest with you, I have added about $400,000 to my portfolio. So I actually sort of grew like $400,000 to $2 million, but it was done much later in my portfolio journey. So I've grown $2,000 to 7, and then to 17, then to 70, and then I added $30,000 because I started working at a job out of college and working at IBM as a consultant. I didn't want to take a finance job anymore because I had already all the experience that I wanted. I honestly didn't want to work any more finance jobs. I had already worked for Goldman Sachs. I worked for PNC Capital Advisors, which is, like a buy-side hedge fund in Philadelphia. I worked at Group 1 Trading, which is an option trading firm on Wall Street when I was like 19. I've been to Susquehanna International Group. I've learned how to play poker. I've done so many things. And by the way, you're like, why is poker important? Well, option trading and poker is actually very similar because you take on a lot of risk when you make option trades and you're making strategic decisions. So anyways, long story short, when I graduated college, I took a job at IBM and I started adding some money. So I took my portfolio to $70,000 organically, and then I added $30,000 and added $100,000. Honestly, I was just trading a lot of Teslas. So I took my portfolio from $100,000 to $700,000 trading Tesla. And a lot of people ask me, how did you do that? Well, I actually did it by doing put credit spreads. Okay, so a put credit spread is basically where you are, selling one put option, buying another put option. When you sell a put option, it's typically, really expensive because, basically, when you sell a put option, you need all the collateral, right? It has to be cash secured. You could trade naked puts, but most of you guys can't do that, especially if you're using something like Robinhood. So essentially, I had a decent amount of capital, 6 figures, but I was still treating 6 figures like a small portfolio. I don't know if I would do that again. I was a little bit reckless. I was probably around 25 at this point. So I decided to take on, quite a bit of risk. I was really confident in Tesla. And look, whether it was luck, whether it was skill, whether it was, skill meets opportunity and preparation, I took $100,000 to $700,000 by doing at the money put credit spreads. So what that looks like is if Tesla's at $100, I ended up selling like a, literally like $100 put and then a $95 put. I was just so certain that it's going to keep going up. So I definitely did a lot of risky strategies on Tesla. And I don't know if I would recommend that to most people. But the fact of the matter is you can definitely use part of your portfolio. So say that you have like $20,000 or whatever, you would take 10% of your money and you would put into spreads. That's always what I basically advocate for. I would never tell someone to fully have all their money in spreads because it just doesn't make sense. Unless you have $5,000, then yeah, sure, you can put most of your money into put credit spreads. But also keep this in mind. even put credit spreads in and of itself is sort of risky because if the market pulls back, you end up losing 100% of what you put up in capital. So it can be really risky. You can absolutely burn your money. And for that reason, I would probably recommend someone, obviously not financial advice, I'm not a financial advisor, just the guy that's a multimillionaire that has lots of experience, that's worked with financial advisors. But you want to have put credit spreads and call credit spreads. You need both because essentially if the market pulls back, your call credit spreads benefit. The market goes up, well, then your put credit spreads benefit. And when you do out of the money options, so specifically when you sell like a 15 delta, a lot of people ask me, okay, I'm just being straightforward with you, I'm shooting straight, okay? A lot of people ask me like, what strike do I pick? Like, to be honest, if you go less than a 20 delta, but above a 10 delta, that's really where my sweet spot is. So if I'm doing a put credit spread, like, yeah, sure, like a 3 delta is super safe, but there's no money there and you're paying fees. And if you go 50 delta, then the risk is just too high. And I've just realized that the best results are around like 10 to 20 delta, but you could definitely go higher if the stock has a lot of momentum. So for example, if a stock like Tesla is going up, you can honestly like ride that wave by doing put credit spreads that are really high delta. Obviously you're taking a risk here, but in a bull market, you can just make so much money. Like I was doing like 10 to 20% return per week, which was obviously how I did 100K to 700K in that 1 year. I also did a little bit of leap options. So by the way, if you guys want me to talk about leaps or even poor man's covered calls, I'm happy to talk about that a bit more in like my next video. Just shoot me a comment down below. As always, I always, appreciate any likes or, subscribing to my channel, like helps me out. So I'm really appreciative of that. But my main journey is to just help you kind of grow. So basically I was doing leap options, which is like going long options. But again, I was shooting my portfolio even with 100K that it was like a small portfolio and we were in a bull market. So like this worked really, really well. But instead of buying shares of Tesla, which is really expensive, I was buying leap options. So a leap basically allows you to put up so much like less capital up front. And I have videos on my channel, like in my playlist, you can check out Invest with Henry like playlist. I have leap options, which is I'm buying an in the money leap. So it could be like a 70 delta or honestly even an 80 delta, right? Something like that. And basically that high delta means that your option is behaving very similar to a stock. So when the stock goes up by $1, this option is going to move up by like 70 or 80 cents, but you're putting up 30%, 20% of what you would have to put up had you had 100 shares. And that option allows you to own 100 shares. So options are just fantastic because they're like leveraged instruments, and leverage gives you lots of power. A lot of people are like afraid of leverage, but to be honest, like nobody's afraid to take a house loan. Why are you afraid to leverage a high quality stock such as, it was like Tesla or like right now, my favorite stock is Apple. Well, you guys already know, I have a Discord community and like a lot of the trades that I'm making is right now, like put credit spreads on Apple. And I've just honestly been killing it. Like here, I'll put up on the screen right now, like some of the trades that I made on Apple. Just grown my portfolio so much, and Apple is a big component of that. And I've just realized that like looking at Warren Buffett's portfolio, he has so much in Apple. And, after studying finance, economics, analytics, and accounting in, Drexel University, I studied at Drexel and then I had some time at University of Pennsylvania as well. I studied under, a professor that's on CNBC quite often, and I taken a lot of his classes. Just after like learning all that, I just really wanted to generate some alpha in my portfolio, because if you look at tech companies, right, they have just been performing so well because of big brands, and brands just crush it, right? Because people recognize brand, they trust brand, and they're willing to spend way more money, right, on a big brand because it just has that X factor effect. So something like Apple, like literally people are spending their last dollars on Apple. I've been to so many countries, right? Like I was in Ukraine, I was in Turkey, I was in Georgia, I was in Czech Republic, I'm in Poland, I was all over Europe. I've been to so many places, Stockholm, Sweden, Mexico, Colombia. I speak Russian, I speak Spanish pretty decently, not as well as I speak Russian, but people have iPhones everywhere. Like people will spend their last dollar on iPhones, and especially in like Eastern Europe and like so many cultures, people want to flex. Like they don't care, they will flex the last dollars that they got, and an iPhone is like an essential. Like iPhone's like water. So a big brand like Apple, like every time they release a new iPhone, like my friend here has an iPhone 15. I'm like, oh, that's cool. Like I don't really care. I have a couple phones. I have like an iPhone 13. I have an iPhone like a 10XR. Because like I'm just not a, you guys actually like this about me, which I really appreciate, but like I'm not a big spender. Yeah, like I'm wearing Fendi right now. This is like $1,000, but to be honest, like on a daily basis, I'm living pretty simple. Yeah, like I travel, I'm like staying in nice, decent hotels, but like I'm not really flexing a Lambo. I'm not really buying a whole bunch of stuff. Like I probably spend like maybe $10,000 a month, which again is quite high, but I could probably spend a lot more, but you know, I'm not really a huge spender. I kind of came from a really humble background from like Soviet Union parents that were just like in a really, really rough spot, which is kind of why I go to therapy right now. Is, you know, it's really tough growing up without money, but then there's also like kind of a lot of parenting issues from the Soviet Union, right? They don't know how to show you love, etc. Whatever. This is about money though, not about mental health. But I'm not a huge spender. So for me, like investing in the stock market is just supposed to generate passive income. And I think the best way that you can generate passive income plus growth plus beating the market is literally through tech stocks like Apple and running the put credit spread strategy, running even leap options. Like you can put a lot less down and have leverage. And like, again, going back, people will invest in real estate without blinking an eye, or like they know real estate gets you rich, but like options gets you rich as well. And you don't have to like leave your house. Like I'm traveling, people that have real estate, like they get a bunch of calls like, here, my toilet is leaking and my sink and my roof, whatever, right? So I don't want to deal with a lot of that. And honestly, scaling your portfolio is just a matter of having balance. So you want to have multiple different positions in your portfolio. Like ideally, you know, when I was in, you know, finance school, 12 stocks is like good diversification. But honestly, like I think that if you put your money into like Apple, Google, Microsoft, Tesla, and the other tech stock, the other big tech stock, you're gonna do really well because these tech stocks have brand, but also like their profit margin continues to increase. Yeah, they have some really expensive employees for sure. Like tech workers are making six figures, and for some reason, a lot of my clients are Indian IT workers. I love you guys, and you guys have a lot of success, you know, for whatever reason, right? But a lot of IT workers have really high pay. Like they're making, you know, like upwards of $150,000 to even $350,000. So that does cost these tech companies quite a bit, but the most scalable thing is software, content and software actually. So just being honest with you, like becoming a YouTuber is actually really lucrative. And there's so many YouTubers that are just shilling you either programs or they're just talking about really popular stocks. And that's honestly why I refuse to talk about like too many stocks on this channel. I'm just straight up educating you guys and telling you my opinion, where I'm putting my money. I'm showing you my wins and my losses. I'm being super transparent because I want to be known for, you know, being transparent. You know, I'm not going to cover the same stock every single day and like just shill like the same stock or whatever. If I talk about a stock, I most likely believe in it and I own it, or I think there's an opportunity there. So for me, that's really important. And I'm just straight up telling you that you want to have balance in your portfolio, and having tech companies is like the way to go. And a lot of my money right now is in Apple. So I'm doing put credit spreads on Apple. I'm doing covered calls on Apple. I'm also selling puts on Apple. I've also recently covered on this channel Covered Strangle. If you didn't watch that video, like you're really missing out, because a Covered Strangle, although it sounds complicated, is not that complicated. In fact, it's a combination of selling puts and covered calls. And for me, just like that strategy is so amazing, because if you think about it, you know, just to kind of recap on that video, you should definitely watch, I'll link to it, is basically, if you already have the stock, right, say it's at $100, well, when you sell covered calls, you generate some income. But if you sell some puts at like 95, now you're generating income on both sides. So the covered call is making you money, the sell put is making you money. If it goes up, well, cool, you made money on the put, you made money on the stock, and obviously made money on the covered calls. Like that's three incomes right there, okay? Sort of, right? You have like three incomes within one play, okay? But if the stock basically pulls back, then you still made money on the covered call, you still made money on the put, and now you're dollar cost averaging and you're buying the stock for cheaper. So for me, like, I can't say this enough. So many people think that they have to find the next opportunity. They need to do something risky. Like I had a client who had $800,000 on spreads and he was using TD Ameritrade. And like, I like TD Ameritrade. I have an account there, but like, listen, if you're going to do spreads on TD Ameritrade, it's literally 65 cents a contract. So it's 2 contracts per spread. That's $1.30. The guy was having like hundreds of contracts. So each trade was like $130 in fees. And I ended up looking at his portfolio, right? Because in the Discord, you guys also get like a 30-minute session with me. So when I had my one-on-one with him, I was just like, dude, like you have like 1,000 contracts, right? So this is like equivalent to $650 per week that you're trading. The guy's like, yeah, I love weekly trading. But like, listen, weekly trading, that's $650 in fees that he was paying. I'm like, listen, you need to back off of the credit spreads, find a little bit of a free broker, use some spreads there, but also just having a full portfolio in spreads doesn't make sense. Like the guy has $800,000. If you have $5,000, be all spreads. As you approach like $20,000, you should start to have covered calls, selling puts, the wheel strategy, covered strangle. You should start to diversify into different strategies, right? You can't just be all spreads. That's not good. That's like you playing rock, paper, scissors, shoot, and you're just like playing scissors every single time. Like you're very predictable. By the way, do you guys know the best strategy for rock, paper, scissors, shoot? Think about it. Comment down below. Obviously, I'm going to give you the answer right now. This isn't game theory, by the way, because I studied economics and game theory, and this has a lot to do with option trading as well. The best strategy in rock, paper, scissors, shoot, you might be like thinking, oh, maybe it's playing rock first or scissors first. No, actually, It's playing rock, papers, and scissors at an equal 1/3, 1/3, 1/3 probability, meaning at random, I will throw rock, scissors, paper, scissors, rock, paper. By the way, what I just said right there, I dare you. Don't think, just go on a piece of paper and write down like rock, paper, scissors. And I bet you like whatever I just blurted out, because I did it pretty randomly, I'm pretty good at doing that. I also study a lot of math, so I'm pretty fast at that stuff. I bet you like whatever I just blurted out is most likely going to beat most of you guys, because most people will try to like methodically be like paper, like they're gonna think about it way too much. But if you throw at random, that's when you have the best success. And the same thing, like, right, you guys are probably like getting your mind going here, but the same thing with option trading. If you just do poker at spreads, like that's an exploitable strategy, and the market is going to reward it sometimes, but hurt you in other times. So to really generate the alpha, you're gonna wanna have multiple strategies with different stocks, and you're not gonna wanna over diversify, because if you over diversify, then you might as well just hold ETFs, and you might as well not watch any news. Like people are like, hey, what do you think about the war? By the way, that's kind of like, I have some roots like from Eastern Europe, Israel, whatever, like pretty much roots in all of like a lot of Eastern Europe. People are like, well, what do you think? It's like, well, I'm not really looking at the news, although it's really, really unfortunate. Like obviously like the war that's going on, you know, a little bit higher. And I don't want to mention all the countries, because like I don't want to get like banned or have any problems with YouTube, right? But you guys know like there's a really big war obviously going on. It's continuing, and now there's like more like attacks, and it's really unfortunate that people are fighting. Like I wish we would kind of all get along and kind of work together on like technology and healthcare and all that stuff, but whatever. What I'm trying to get at is I don't really focus on like the macroeconomic level, because you can't really predict that. So many people are like, well, what's going to happen with SPY? It's like, dude, like just don't worry about it. Like what's going to happen like tomorrow morning with your breakfast, like just like don't worry about it, just like step by step. I hate trying to predict the future, and unless like you're a time traveler, you're just not going to predict the future. So it doesn't really make sense for me to like tell anyone to like really research the news or anything. That's why I don't do news content. Like news content actually gets more views on YouTube than the educational content that I'm making. But I'm going to be honest with you, I don't think watching the news is beneficial at all. You're not going to make more money, you're just wasting your precious time. In my opinion, you should be making active income to scale your portfolio to the point where your passive income over exceeds your active income. And I did this kind of early. So going back to my story, like I went from 100K to like 700K, and then I did do pretty well. So I did some coaching, right? And I made like 300K or so. So I ended up adding like 300K, which was quite a bit of a chunk. And then I took a mil to like basically like 1.7, and then I took it to 2.1 million, but then I started to withdraw money. So like one of my portfolios is like 1.7. Then I started to diversify, and that's why I have a second portfolio as well. And the thing is, I've always been diversified amongst different strategies, and I've also been diversified in different stocks, but I don't overdo it, because if you overdo it, again, just better to have ETFs. But if you underdo it and you're just all in on Tesla, which is something that I did do for some time, just being transparent, it can get you a lot of return, but it can also cause a lot of risk. So most of my audience, you were like 40 years old, 45 or 50 for the most part, even like 55. Most of you guys are men that have pretty decent jobs, like, you know, $70,000 income to like 150,000 or so, right? Like that's just my average demographic, usually like married, right? You guys are in the perfect position because you can save a lot of your income. And even if you're making less than $70,000, I have plenty of people that are making like, I don't know, like 40, 50 grand. If you can even put away like $1,000 per month, keep adding that to your portfolio while trading options, like that's going to compound and scale your portfolio from a small one to a big one within a decade. Might sound like a lot, but I have a net worth tracking sheet within my Discord. And like literally anyone, even starting from zero, can become a millionaire in 10 years. And like newsflash, people like never get to $1 million, like ever. Only a certain select few people like even get to a mil, and like either they can't even hang on to the million or they end up losing it. But like I literally have a plan for anyone to get to in 10 years to get to $1 million, even starting from scratch, just putting away like, you know, a couple $1,000s per month. Now, obviously, even if you can't do that right now, you're going to scale your active income, you know, over the next few years, because everyone's growing skills, and, you know, inflation goes up and employers typically pay more, and we typically make more every single year. So if you take a look at it that way, then you're in the perfect shape, even if you have nothing, to retire off of option trading. And there's a complete plan for that, even if, again, you're starting from scratch. So for me, it's pretty silly when people don't take this stuff seriously and they look for the next shiny object, because there's just so much potential here. And this is exactly how I basically retired with option trading, and now I do coaching, and like I don't even need this income. So like now I just basically do whatever I want, but I really enjoy coaching and helping people, and I feel like it's part of my mission. And I honestly don't know what else to do with myself. So, you know, like I like traveling, but I've been to so many countries now. The next thing for me is really like just like, you know, building a family, continuing to help you guys in building your wealth, and just creating a legacy here of phenomenal, transparent education where I just share like honest truth strategies that actually work, and I don't, follow what all the other guys on YouTube do, which is like, promote their Patreon or, just selling a course and like basically banking off that course. Like, yeah, I also sell a Discord community, but it's not really something that I like have to do, right? I'm not like focusing on just that. I'm focusing mainly on the results, and I'm doing that as a byproduct of what I enjoy doing. So I built a community around what I love doing. So I was first a trader that made a lot of money, and then I started teaching it. Whereas all the other people, like, they're making majority of their income through the courses aspect, and they don't even have like a degree in this. They don't have experience in this. And it just kind of like upsets me, because a lot of my students come from other people and they just say like, well, that person was so good on camera, they had such a credible YouTube following, but I didn't get the results. Well, yes, because like you have to really understand the difference between marketing and someone that actually knows how to trade. I know it's like pretty hard, and there's very like few people like that. Most people are actors, or like they're charlatans, like just selling like snake oil basically. But you really need to understand that scaling your portfolio is pretty straightforward. I have tons of free videos. You don't need to join anything. You don't need to buy anything. Only if you want to join the community, you can have access to me. But it doesn't really matter to me. I'm here to help you either way. So yeah, I appreciate you liking and subscribing to this video. And there's more videos on my channel that you can check out. So see you guys in the next one.